What's good, everybody? This is Zay right here. Zay, what the fuck am I talking about? This is Zay here with day 5 or 6. I forgot which one we on. But day 5 or 6 for the RTB Bootcamp. Today is gonna be a real short video. It's not gonna be too long. Not gonna talk your heads off like the last one. This video about time frames. So I'm gonna get right into it. So with time frames, the main thing y'all gotta understand in time frames that all that's price is all about time, bro. All these candles that you're looking at, everything that you're seeing on the charts, because you're using different groups of candles to make your decisions when you're taking trades. All these candles represent a specific time frame, and those time frames are up here at the top where you see the 1 minute, 2 minute, 3 minute, 5 minute, 10 minute, 15, whatever. All those, whenever you click on one, is a specific time frame, and y'all need to be aware of what time frames y'all are looking at when you're taking trades or when you're looking for confluences and all that stuff. You need to know exactly what you're looking at. The price on the side right here, this vertical thing where the price is at, does not necessarily matter. If you're day trading, you're not worried about what price it's at other than knowing where you got your entry at and all that shit. You're worried about what the algorithm that price moves on is what you got to worry about, and that's shown through these candles. That's shown through these candles, and you're reading the algorithm as it goes. But with that being said, time is fractal on these charts. That means all these formations that you see will be shown on all different time frames, whether you're on the 1 minute or the monthly time frame. Once you get into learning about PD arrays and all this other stuff like fair value gaps and shit like that, you'll understand that all of those get created on all different time frames, but you're gonna use them differently based on which time frame you're using. So I want y'all to remember that and write that down. Time is fractal. But so the main point I want to get at with this video too, with time frames, write this down. Larger time frames hold dominance over lower time frames. The daily, weekly hold way more dominance over the 15 minute, 5 minute, 2 minute, 1 hour. It just it's common sense, but looking at those time frames, the higher time frames hold dominance over the lower time frames. The 5 minutes gonna hold more dominance over the 1 minute. And holding dominance means and making an inference or getting an understanding of where price is moving. You're gonna get a better understanding from looking at a higher time frame for overall price movement for that day versus looking at a lower time frame. And once you get into this stuff, you're gonna take setups on different time frames depending on what makes sense to you when you build your trading plan. But the main ones that you're probably going to take trades on is probably 1 minute, anywhere from the 1 minute to really the 5 minute, but maybe the 1 to the 15. But taking trades on the 15 minute, you're leaving yourself a lot of room for retracements, a lot of rooms to lose. Because a move on the 15 minute, your stop loss is going to be pretty far away and you're going to be risking a lot more. And yeah, I say the best ones to look at are anywhere from the 1 minute to the 5 minute. And you use the 10, 15, and hourly, 4 hour daily for confluence in the direction that you're looking to go. But yeah, and a lot of these time frames are aligned with each other. Like you could use, I got it on my phone right here, so I'll read it to y'all. But the monthly time frame is aligned with the daily time frame, and the weekly time frame is aligned with the 4 hour, the daily is aligned with the 1 hour, the 4 hour is aligned with the 15 minute, the 1 hour is aligned with the 5 minute, and the 15 minute is aligned with the 1 minute. And what that means is you'll learn about what a PD array is, and that's like a fair value gap. We don't really talk about order blocks, but that's like an order block, all those type of things that we use to get entries off of trades and set up trades and shit. When you see moves like that on those time frames, you're gonna scale down to the lower time frame that it's aligned with, and You're gonna scale down to lower time frames that's aligned with, and look for your entry. Look to enter onto the trades based on those lower time frames. But yeah, so with these time frames, I'll just show you how I go into the charts every morning. So when I hop into the charts to first take a trade, I'll first start with the daily time frame. We're gonna have a video specifically on daily bias, but that's how you find your daily bias. Sometimes you could use the weekly time frame, but I never really go to the weekly time frame. I just hop on the charts in the beginning of the day when I first open it, go to the daily time frame, see what price is doing. I mark out specific highs and lows. So like I'd mark out a high right here, mark out this high maybe, mark out this low, and then I won't get too much into what I'll do off of those just because y'all don't really know what I'm talking about. I'll just like say, like this is a gap right here, this is a fair value gap, and you'll learn in different videos about what that means. But a daily fair value gap, when price is in a gap like that, I would think that price is going to the downside. So I'd mark out a low, and then I'll look to see I'd make an inference of this specific time frame off the daily, and then go to the 4 hour, and then I'd be looking for an alignment with what I think price is gonna do from the daily to the 4 hour. So if the 4 hour, I think price is gonna go down as well, and then I'll go to the 1 hour, and then I see a move and I think price is gonna go down as well, then I'll have a bias that price is bearish, and vice versa. If I think price is gonna go up and I see the same thing over these three time frames, specifically the 1 hour, the 4 hour, and the daily, then that's heavy confluence for price moving in that specific direction. If you could align the 1 hour and the 4 hour on the daily with the same confluence that you think price is gonna go in that direction, that is a high confidence. You'll have high confidence with the trade that you take in that direction. So you use these to figure out where price wants to go for that day. You use the daily and the 4 hour and the 1 hour to see where price wants to go for that day. And then you chop down to the 15 minute to look for a setup on there. And again, we'll talk about those specific types of setups in different videos. But you'll go for the 15 minute to see, does price still align with that on the 15 minute? And then you might see something there. And if it doesn't, the smart thing to do would be to wait. You go to the 15 and the 5 minute. You want to wait to see, like maybe a liquidity high has to get taken out before a price moves back to the downside. So you want to wait for a liquidity sweep and then look for moves to that bias that you had on the higher time frames. Those are going to be your most high quality trades, and your highest your highest quality of trades is when the trades that you find on the lower time frames align with the bias that you have on the higher time frames. And that's the easiest way for me to put it. Because the same way there's gaps on the higher time frames, you want to use those models that you see and what biases you find on those higher time frames to enter off of on the lower time frames. Now, every once in a while, especially once you have more time in the market and you get a better understanding of how price works, you might have a bearish bias on these higher time frames, and then you see a perfect setup on the 15 minute and the 5 minute to take out liquidity before it goes back to the downside. So you might catch that move up and get out at that liquidity level before it goes in that direction that your bias was on those higher time frames. And you'll understand that the more you get into this shit. But for the best probability to win, you want majority of these time frames to align with the direction that your trade is going in. Because if you're taking one trade a day, that's the highest probability of winning. You're able to align all these time frames together. Align all these time frames, say, I'm bearish on the daily, I'm bearish on the 4 hour, I'm bearish on the 1 hour, 15 minute, 5 minute, whatever. So I'm gonna take a short. And you're gonna have a higher win rate when you're able to align all those time frames. And it's not always gonna work out like that. Sometimes you're gonna take moves. You might have a bullish bearish on these two, but on the hourly it's a bear. I said you might have a bullish bias on the 4 hour and the daily, but you might have a bearish bias on the hourly just because you see it's poked into a gap or whatever. So you might take a trade based off that. And in reality, it's not as high of a conviction and as high of a probability, but you can still take dubs off that. It just has to be a valid setup. And yeah, that's real simple. That's really all I wanted to get into. I'm gonna just put out some notes for y'all right quick to just recap what I talked about. For one, time is fractal, meaning setups happen on every time frame. What's the other thing I said? Oh yeah, higher time frames hold dominance over lower time frames. Lower time frames. And then use the daily, 4 hour, and 1 hour to find bias for your trades. Use the 1 minute to 15 minute to find entries. Now I'm gonna say preferably 1 to 5 minute, because that'll get you better entries. You'll be able to catch moves like corrections and shit like that. But yeah, this is the main focus of what I was talking about throughout this whole video. And then like the time frame alignments, the time frames that align with each other, I'm not gonna lie, I never really pay attention to that shit while I'm in the charts and while I'm trading. It's just something good to know, something to keep in your notes, that this time frame aligns with this time frame. Oh yeah, another thing I want to get into is macros. These are times during the session, like New York session or whichever session that you're trading, where price is going to be a little bit more volatile and there's going to be a lot more movement in the market usually. Like today is January 6th, price was shitty all day, so macros ain't matter too much, but the macros would be the last 10 minutes of the hour and the first 10 minutes of the hour. So say like 9:50 to 10:10. Macros time frame, last 10 minutes of hour and first 10 minutes of hour. That's another important one to pay attention to as well. When you looking for trades, you could wait for, if price isn't moving in that direction, wait for a setup. You'll probably be able to find one in the macros time frame, and that's throughout the whole session. Like every hour is the last 10 minutes and the first 10 minutes of the hour of the next hour. So, but also use that to understand if price is not going and you're in the middle of a trade and price ain't going in your direction, it's close to your stop loss, and the macro times is coming up, you might get your stop loss hit. You might get cooked out your trade. It's just something to keep in mind when you're on the charts and shit. But yeah, this is a recap for all that shit. And yeah, didn't want to make this video too long. If any of y'all got questions, hop in that Discord, ask us any questions at any time, and we'll be glad to help. We back live trading. We live traded today. Hop in them live trading videos, make some money with us. And yeah, man, we do review sessions on these videos where everybody can hop in and ask questions in real time, and we'll review over the topics that we spoke on for the boot camp for that week. So we yeah, and that's all, man. Anything else I want to cover? Nah. Yeah, so look out for the next video. Hop in that Discord, live trade with us. If y'all want to touch some cheese, catch some free plays. And that's it, man. We out.